All right, good evening, ladies and gentlemen. Welcome to another episode of weekly market analysis series. We do this every Saturday. We look at the market, uh, what market has done, and we try to anticipate what it will likely do. So we usually start with our dollar index. I'm your host, Godspire Englebo is my name. All right, so let's begin quickly. This is the dollar index. The symbol is DXY on TradingView. Now, for last week, we saw that Friday, because of course, this is the first week of November, and usually what happens is that every first week of a new month, that's what we call NFP, non-farm payroll. Non-farm payroll, it happens every Friday. Every Friday, New York time, 8:30 a.m. New York time. You have that news release and it distorts the whole sentiment in the marketplace, all right? So if you look at what happened on day-to-day basis, you can see that it was consolidation week. This is Monday, Tuesday, Wednesday, Thursday, then Friday. That was when you had the volatility. It was on Friday that the volatility occurred. All right, it was on Friday you had the volatility. Yeah, the other 4 days were just low range trading days. So the what do you call it? The volatility was on Friday. All right, now so that changed the whole stance from bullish to bearish on Friday. Now this is what I'm looking at. This is what I'm looking at. Though I am still long-term bullish index. I'm still long-term bullish, but you have a high, you have a low. These are relatively called lows, and then you have a higher high, and then that is like a what do you call it? Sorry, excuse me, hold on. Let me take it again. You have a low, a high, a lower low. So you have bearish trend, all right? Now it then broke it to the upside this way. So this is breaking market structure right there, all right? When it took out this high, so that's a breaking market structure. So what I expected it to do was to poke its head initially inside there, come down, test the breakup before it sends it higher again. That was my prognostication. All this, but that's why I've been very hard on my bullish stance on GBP on dollar index. Now it has consolidated here several weeks, and you see the drop last week. Now based on this drop, I want to see how price actually test this breakup block right here. So this is what I'm looking at, and the middle point of this line, let me draw it out. That should act as support to take price higher. So this is my final prognostication, that to get to this level and then finally move up higher. All right, that's what I'm looking for right now. Okay, based on what has happened on Friday, that's shifted the sentiment for me. So I expect it to move up to this level we have outlined, which is also, if you look at it closely, is still within the range of this bullish order block. The bullish order block is from this high, measure this high, as in, sorry, not bullish order block, the bullish breaker block. So this is it. 50% is around this area. So there are two confluences, the mean threshold of this bullish breaker block and the consequent encroachment of this wick, this long tail. So those are the two what do you call it, areas of confluence I'm looking at. I want those areas to act as support to send price higher. So based on what happened on Friday, that made it all bearish. All right, it was consolidating from Monday to Thursday, and then on Friday finally sent price lower. So based on that, I want to see it trade to this level and then finally send price higher. Okay, so we might want to see a bearish week for the dollar index this new week. That's our anticipation now going forward. So going forward, we want to see bearish movement down to this level, the body should not close below. You see this line I put here now, the body should not close below this line. The body closes below this line, then, or closes below this low, then we want to go and attack this, what they call it, the bullish order block. But I don't see that happening. I think it's, it will get to this point and then we'll see same price higher. So our anticipation for dollar index this new week is bearish, all right, to trade to the breaker block, the bullish breaker block right here. And then I'm looking at the midpoint, in the mean threshold. That's like our last line of defense for bullish dollar. So if it gets to this point, I want to see movement higher, to take price higher. That's what I'm looking at for the new week we're entering from Monday. I want to see movement lower to this level. So let's look at what happened day to day. So day to day we had Monday, Tuesday, Wednesday, made the high of the week, and then dropped lower on Friday. Broke this resistance, this support now. So I want to see it trade back to it and act as resistance to send price lower to test this level above line, which is also what they call it, a bullish order block right here. And then we'll then see price going higher, taking out all these lows, filling in this inefficiency, and this one particularly, you can see it inside the order block. So that's what I'm looking for, price to trade to this level and then finally send price higher the next week. So before this week we're entering, I want to see price drop to this level. Why? Because of what happened on Friday. All right, it has taken all these lows, and you can see how it closed below. If it had just whipped through and then closed above, I would have said, okay, we are going higher. But as it closed below, I want to see here act as resistance for price to go. So this becomes an inversion parabolic to send price lower to this level, taking out these lows, then filling this inefficiency inside this other block. All right, so that's what I'm looking for. So we are bearish on dollar. We are bearish on dollar this new week. We are bearish on dollar this new week. 4 hours time frame. This one will leave it. This is what they call it. This is a real liquidity void and open. I think this is it's not even open week. But this is supposed to be 2 weeks ago, right? No, it's this week. It's this week. Wednesday. This gap here will not be traded to immediately until it fulfills this what do you call it, this objective before we can start seeing price going high. I don't see it trading to this level. No. It has already broken this low. So we have a high, a low, a higher high, then break. So this is a bearish breakup block extended out in time. We want to see that act as a resistance to send price lower inside the, what do you call it, the weekly FVG, the weekly BC. Okay, so it will not act as inversion FVG to send price lower. So you can poke its head to test this level, but ultimately give up the goods. So our target right here. Let me show you the target again. This level right here. That's what I'm looking for. So that's for dollar index. Let's look at for table. Let me think about this. I think they've served their purpose. So I know what I'm looking for right now. So just to recap, dollar, we're looking at the bearish dollar this week. Bearish dollar to test those levels I just outlined. So they are not random levels, they are specific levels. The bullish breakup block, and also inside daily order block, daily bullish order block, taking out all the equal lows and the sell-side liquidity is resting there inside the imbalance we apply on daily time frame. So these are all the levels we are looking for. So this FVG here inside this order block, which is also what do you call it, inside a weekly breakup block. All right, weekly breakup block, bullish breakup block. So these are the levels I to test, and then finally once we see how it reacts there by this end of this week, we'll know if it's going to go lower and if it's going to reverse to go higher. But I want to see that level act as support to send price higher. Okay, so it's just a temporary or short-term bearishness on the dollar, all right, before we can now finally see the extrapolated move to the upside to trade into this monthly CB that was created. Okay, so that's about that. Let's go to Euro USD fiber. So all right, so for our fiber, it was bullish. Dollar was bearish, so this became bullish, and this bullishness was seen on Friday. Was seen on Friday because of the non-farm payroll. Was seen on Friday. We anticipated. I wanted it to go lower, but because dollar went lower, this had to go higher because it's diametrically opposite to the dollar. All right, so you have a high, a low, a higher high, and then a break. So that's broken. It's coming to test the breakup block. All right, series of down close candles before the up move. That's the bearish breakup block is coming to test it. If you see this week here, so that's what I'm looking at. 50% of this week, that's area to watch out for. Price, I need price to get to that level to act as resistance. You have inversion FBG right here. So those are conferences to send price, and inside the bearish breakup block to send price lower. Okay, so like I said, it's also temporal. We don't want to see trade above to take out the side. No. Just a temporal movement here, then finally, trade. So it has actually given retail traders this narrative that this is a support. All right, so they want to buy into this rally and to just give them a short-term buy into this level, and then finally we see a smash lower, taking out all these loans now, trading into the monthly BC. That's what I'm looking at for. That's what I'm looking at for. So I'm looking at this level right here. So that's my level for the new week. So we are bullish on Euro USD. We are bullish on you. So you can see Monday, Tuesday, Wednesday, traded lower, took out the lows, traded lows of the week, and then Thursday, Friday, you can see Friday expansion to the upside. All right. Now this level right here, this CB will now act as a support to send price higher, to take at that level, to trade to this level, which is also a bearish order block inside here. So that's what I'm looking out for. That's the level I'm looking out for price to trade to. All right, before we see a downward movement. I don't want to see close above here. I don't want to see that happen. I want to see movement into this level and then send price down, which is also inside the breakup block. Right, inside the breakup block. That's weekly breakup. All right, weekly bearish breakup. For daily, that's already traded to. So want this level now to act as what they call it, mitigation block, bearish mitigation block. So we want to see price straight week before movement lower, taking out all these highs, filling this inefficiency, and then let this bearish mitigation block act as a resistance to send price lower. So we want to see bullish movements to that level this new week. On 4 hours time frame, what I'm looking for, we have BC here, we have relatively equal lows. So, and that's also the daily CB, which is now a inversion FBG. Okay, so want to see price coming back to trade to these lows. Let this now act as inversion FBG to send price higher. All right, that's what we are looking. That's what we're looking for. Okay, so that's about that. So Euro USD will be temporary bullish. So for those of you that trade, moving average crossover, like you're riding the trend strategy, if your stop loss is here or here, you need to close the trade because this is going to move higher before it finally comes lower. You might want to wick through, but I don't want it to close above it. There's a difference between wick and closing. The high and closing price are different. So you can wick through, but you shouldn't close above it. Okay, so if your stop loss is resting here, as you're riding this trend all the way from this level to this level, please, I will advise you to close your positions, okay? Because this thing is going to rally up to this level, and this is forex, and forex pairs there's this liberty for what you call the brokers to want to manipulate the price in their own way, just a little. That's why all the brokers fees are not the same. FXTM, Oanda, Forex.com, OptaFX, Hamtech, and every other, what do you call it, brokers that you have there. You see that their high lows and closing price are not the same, because they are permitted by law to add one or two, deviations, all right, in their price feed. So you could see some, what do you call it, some brokers, even if it gets here, they might want to just week through, and then finally close below. So that's why the stop loss resting here. If your stop loss is here, please, you want to take it off maybe by Monday. Just close the trade and wait for new setup before you start selling. All right. So, and then don't think of you want to ride it to buy, except to use lower time frame to buy it. Don't, for daily time, you just allow it get to this level, and then once it starts going lower, you continue yourself, because it's a long-term sell, all right, down to that monthly inefficiency that we outlined. Okay, so that's about that. So we are bullish on Euro USD. All right, we are bullish on Euro USD. So this level now, as has broken it and closed above it, it's not that support to send price higher to those levels I've outlined, and then we finally want to see price going lower. All right, so for GBP USD, which is our next pair, let's look at GBP USD. All right, so we all know that once dollar changes stance, every other currency, every other asset class of currency wants us to change stance. So we can see exactly what happened. We outlined that this is going to trade to take out this low, but it didn't. It rested inside the BC and finally sent price higher after multiple attempts to trade lower. Now that's giving the impression that this is a support and has sent price higher. Where is it taking it to? Already has already traded into the breaker block, which is what we're time like. You can also just send it up to mitigation block right here, because the dollar is going to be buried this week. So GBP should be bullish. So you can permit it to trade up to this level, and then finally send price lower. So for GBP USD, we are also bullish. We are bullish on GBP USD, and you can see clearly this area that I outlined. And see exactly what happened. Let me just make this in darker. You can see, like it closed above it. It has traded above. That's what they call it, the resistance zone I created, which is the FVG. All right, that's closed above it. So it means that it's going to go higher. And the level I'm looking out for, what we're seeing here, it's just there's a little small inefficiency here, and then the mitigation block. So that's where I expect price to get to before it finally goes lower. It's not something that we want to see take to this level, to take out this high. No, we're not seeing that. We don't want that to happen. But we don't anticipate that to happen. All right. We want to see just a temporary move up, and the level we are outlining is this mitigation block inside the breaker block. All right. So we should get there and then finally take price lower. That's what we're looking for, not an extrapolated move to take out this high. No. We don't want to see that, because we are long-term bearish. Long-term bearish. On daily time frame, you can see Monday, Tuesday, Wednesday, they were all consolidating, trading in the range inside the inefficiency. That weekly BC. That's this area right here. Okay, so it's been trading inside it for multiple days, and finally Thursday traded above it, and then Friday you can see the movement higher, and then it closed above this weekly CB. So for that, want to see price act as what do you call it, support to go higher, take out these highs, and then trade into this what do you call it, this mitigation block right here, which is inside the breaker as well, and then to send price. I don't want to see it close above this stage. We shouldn't get to these levels. We shouldn't. It's just a temporary move up to go down. Okay, but the moment it closes above this, then this high will be in the jeopardy. Okay, so that's about that. All right, so we want to see a movement lower, within the beginning of the week. But it's Tuesday, we want to see movement lower. We have inefficiency right here. We have a breaker block right here. So we want to see price trade test those levels. This is also another inefficiency on the daily time frame. It's also for daily time frame. So you can act as a support to send price higher. This is a CB on daily time frame. Let me show you right here so you can understand. Look at it here. This CB will now act as inverted FVG to send price higher. So if I see a trade Monday, Tuesday to this level, I want to buy it from here and then take my allow my trade to run for the week to those targets I outlined weekly and daily time frame. So we are bullish on GBP USD. Now, some of you listening, you might think that about this one said price will go lower. Yes, on the longer term, it will go lower. But from the signature we saw here and what market has done, because of course, you're not the one controlling the market, you only trade in line with what market has offered you or market is offering. So at the moment, market has offered a buy side, a temporary movement upward, and I've already outlined the levels we are looking out for. So on weekly time frame, told us that this is a breaker block, okay? A high, a low, a higher high, and it broke down, so you can come back to test it is permissible. All right, and then it's also in line with a mitigation block right here or a bearish order block. They're all you can use them interchangeably, because if you take this to lower time frame, this is a mitigation block. Right here, you can see it as a bearish order block, right? So you can trade up to that and then send price. So we don't want to see it close above this bearish order block. We don't want to see this up close, and we don't want to see price trade above it and close above. No, we don't want to see that happening. So this should not act as resistance. This particular candle inside this breaker block should act as resistance to send price lower. So if you trace to that level, that will be my take profit, and then I'll be content for the week. So if by next week or we see price closing before the end of the closing above this, then okay, sentiment has shifted, want to target this high. And target this high, then we want to start going to look for I saw, let me check it again, it's here. Let's see, monthly time frame, sorry. Okay. When we get there, I'll let us know. All right, so it's just a temporary bullish movement to this bearish order block. That's what we're looking for. All right, so that's it. So after that, then all these lows and then this inefficiency area will now be traded. So for now, we are bullish on GBP USD, and I've applied the level. Please take note of those levels as you trade. Take note of those levels. After the session today, I'll post it on my YouTube channel and send the link to various groups so that we can watch them again and then mark those areas on your chart and then watch as price moves to those areas. Okay, the next one is our Aussie dollar, our AUD USD. AUD USD, okay, so this was the level I outlined. So because there was a sentiment change, there was a shift, bearish movement on dollar, this one started moving higher, okay? USD going to high, low, higher high, break, that's breaker block, so it's going back to test the breaker block, and all these are sell side, so I want to see upside, okay? I want to see upside. Now, I don't want to see it close above it. I want to see it trade back to fill the inefficiency right here, which is this one, okay? I want to see it fill it in, and then finally start going lower. I don't want to see it trade higher to take out this high. If it takes out this high, we have relatively equal highs and we have inefficiency right here. That's not what we are looking for, because for this thing to move to that level, it means that dollar will have to be very, very bearish. So that's not what we're looking for, okay? So once, once we see what happens this week on dollar index, I'll be able to know if sentiment has shifted, okay? But for now, I still feel that we want to trade to this level and then take price lower to clear these lows. That's what I'm looking for. I'm still bearish long term on foreign currencies and bullish long term on dollar index. At least till that CB is filled on dollar index, I still prefer the upside movement for dollar index. So this temporary movement lower is just to, it can't just be going up. It has to also do something of retracement and pull back. So that's what is happening right now. So let's not just think that it has totally changed to the sentiment has changed. No, it's just a temporary, what do you call it, pullback that's happening in the marketplace right now. On daily time frame, and see Monday, Tuesday, Wednesday broke the high at this inefficiency area. Traded above it, then you can see how Thursday, Friday traded into this level. So consolidation, expansion, want to see retracement before another leg of expansion into this. So that retracement should be, this is FVG here, okay? So Monday, Tuesday, trade into this FVG, and then this consolidation, retrace to it, which is also, we have another block here, trace to it, then want to buy it to rally higher. That's the analysis for this. Relatively call lows here, FVG not filled, other block here. So I want to see how price trades Monday, Tuesday. Trace to this level, then we'll see how we take a buy to send price higher. And what will be our target to trade to this level, at least to fill in this? That will be our target. Relatively go highs here, trade back to get this further block. So that's our framework. So we want to see movement downward first before we rally high, we buy and take it higher. Okay, so that's for AUD USD. Let's go to our Kiwi. So for Kiwi, this also left all these intact and then rallied higher. So we have volume imbalance here. So that's our drawn liquidity. When you mark it out, volume imbalance there is our drawn liquidity for this. Okay, so that's our drawn liquidity. Want to see price straight to it. You have a high, a low, a higher high, break. So breaker block, want to trade back into it, you have volume imbalance there, and then later we'll see price going lower. All right. This is not a movement to send price higher. No. But if you look at it critically, you can see that these lows have been kept intact. All right. So the movement up was to gather momentum to send it lower. So we want to see price move to this level and then finally smash lower, sweep these lows before any form of movement higher will take place on this pair. All right. So my target for this is this area right here. That's my target for this. All right. That's my target. Okay. So we have Monday, Tuesday, Wednesday swept the lows, equal lows here, traded into 50% of this and then rallied higher. Traded FVG here, same price higher. So I want to see it come back to fill in that level, you know, and then finally move higher to our target level. Where's our target? Target is here. That's our target. That's our target. All right, that's our target. For us, these lows, trade back to it before if it trades back to this level, I'll be confident to buy it here, stop loss layer, or use lower time frames to make my stop loss smaller. And then I want to see movement higher to those levels I've outlined. All right, so they're bullish on NZUS. I'm giving you specific levels I'm looking at. All right, so when you watch the video again, mark those levels on your chart, and then look at how price trades around those levels. Okay, so let's go for the next one. Next one is USD card. USD card, wanted to see this high taking, but because dollar fell, this also has fallen. Volume imbalance traded through, and it closed it perfectly well. We want to revisit this level again. We want to revisit this level again before we go higher. All right, want to revisit this level again. That's what I feel. I don't want it to close below it. It shouldn't even close below this level. It should just revisit this. Let this area act as support. This new week. So this is our range. Trade from here to this. this week. It shouldn't close below. It can wick through, but it shouldn't close below. Rejection block here. It can wick through to take out rejection blocks here, but it should not close below. It shouldn't close below. So if that happens, then I'm not okay. Yes, we want to resume price going what higher. All right. So on day-to-day basis, how did it fare? Day-to-day basis. Monday, Tuesday, Wednesday, struck the highs, traded lower. That's broken this other block, this bullish order block. So because that's broken this bullish order block, so you have high, low, higher, high, break, trade it back as what? There is breaker to send price to this level, sweeping these lows, trading into this level of inefficiency, and then these rejection blocks can be traded to on not a closing basis. That's also 50% of this week before we can start seeing price going higher. So this level should act as support for price to send to go higher. That's what I'm looking for. That's what I'm looking for. Okay, that's what I'm looking for. 4 hours time frame. 4 hours time frame. This area can be traded back to this area. This area can be traded back to. Not this area, but this area is permissible. If you trace back to this area, then that could be a sell, a good sell-off for the week. All right, that could be a good sell-off for the week. So within Tuesday and Wednesday, if you trace back to this level, Tuesday and Wednesday, that could be a good sell-off for the week to our level. All right. So there's swap liquidity here inside other blocks. So you want to have a reaction Monday, Tuesday to send price higher to this level, and then want to see how it goes below to trade below later. So buy Monday, Tuesday, then sell into this level. All right. So that's the framework for USD CAD. That's the framework for USD CAD. Next one is our Japanese yen. So I outlined that it's going to trade to this. It didn't, just fell short of it by some pips. Rallied higher, but didn't. That's what has it created? That's created relatively poor highs. You know, so this where are we looking out for now? This low, you can see this relatively poor lows here. So that's my target for the week. I should trade to this low. That's my target. I should trade to that low. So that's my target for the week. But I have this that's relatively equal. I should trade through it, but not close below it. And then we have this to contend with inside another block. So these are my frameworks. Okay. So these lows. Relatively equal lows. As we extend this out, you see it. Good. So that's what I'm looking for. Relatively equal lows inside other block. So I try to trade through to take out the liquidities resting here, but shouldn't close below it because I'm still bullish on Japanese yen. I'm still bullish on it because dollar is ultimately bullish, but this should, since dollar is going to go lower this week, we expect this also to go lower. Take out the liquidities resting here before we send price higher. So we'll see what happened. We had Monday traded the low of the week, and then rally that Tuesday was impulsive. Then Wednesday did the retracements, the correction. It didn't even close below it. But if dollar is going to go lower, then you have equal lows here. You have another equal lows here, right? And then ultimately this one. So there is liquidity resting here, here, and here. So we want to see some form of movement up Monday, Tuesday before or consolidation, and then with same price. But let me check 4 hours time frame. Relatively equal highs here. All these are traded through balance price range here, offered inversion FVG, which is also in close proximity or inside the same confluence with the relatively poor highs here. So, and then just small inefficiency right here. So that should be our bullish movements, level of bullishness for this pair this week to this level. And then from this level, we can now see price trading lower to attack these lows. attack these lows, and then we'll see how it's going to move to these lows and finally these relatively poor lows. Okay, so you have admission of in price action, want to see trade to this level. Otherwise, if it takes out these lows and this one, I'll be fine with it. But I see that I want to touch this because these are too clean. These are too clean. Okay, so that's my framework. That's my framework. Trade higher, sweep these liquidities, resting here inside inversion FVG, and then when we see price go lower afterwards. All right, so that's about that. That's about that. That's about that. Then the next pair on my list is the USD CHF, a Swiss pair. So what happened? I wanted it to trade above, touch this level. It didn't. It was bullish, but ultimately on Friday gave up, sent the price lower. Okay, so these equal lows can be traded through. And we also have another area of inefficiency right here. So I'll just mark out the lowest point of that area of inefficiency. Good. So that might be a catalyst to send price lower. Right here. No, not perfect. Good. So that's what I'm looking for. Price to trade to this level. Okay. Taking out liquidity, you can see equal lows here inside inefficiency. So that will be our drawn liquidity for the week. That's what I'm looking for. That's what I'm looking for. All right. Before finally start seeing bullish movements, because I know that these lows, these highs have been broken. You can see it traded through it. The board is closed above it. So this movement lower is just to fill in to the prices levels. All these other areas have been efficiently traded through. So since that's closed above this high, this movement is just a short-term retracement, so short-term pullback. So filling this efficiency, you can see all lows that have been created. So want to see drop, filling, and then the upper week after this week, this new week, we want to see price going up. So for this week, we'll be bearish, to this level. That's our target. So I'm marking them out so that you can see how I'm giving specific levels, not just random. I'm giving specific levels, specific areas of concentration, areas that price want to go. So we have Monday, Tuesday, Wednesday, swept high of Monday, of Tuesday, and then traded lower. Friday, the animation was massive to the downside, though it didn't close below this area of inefficiency, but it's going to do that this week. If dollar will go down, then this will also go down this week. 4 hours time frame, consider liquidity resting here has been swept, then it dropped. 4 hours time frame, what happened? 4 hours time frame, we have, I want to trade back to this other block. I want to trade back to this other block, or better still, inside here. It goes past this, then we'll just sweep this liquidity resting here, and then finally send price up. But I think here it should hold price Monday, Tuesday. This area should hold price Monday, Tuesday, and then finally send price lower, because it has been broken to the downside. So you can come and test this mitigation block again, which is also like a bearish order block to send price lower. Okay, so that can happen. Expansion, consolidation, expansion to the downside, retracement into order block, and FPG. Then you see movement going lower. But we might have some more permission if by Monday, Tuesday most especially, if it doesn't sweep this liquidity on Tuesday and this place holds sway, this CB holds sway, then it will want to be animated to the downside eventually from Wednesday down to Friday. So that's our prognostication for this pair. Target is relatively poor lows here inside the FVG that is here on weekly time frame. That's what we want to see price going to. All right, this level here. So that's about that. The next one is our indices. All right. So, like, once dollar goes down, indices and other asset classes, they go up. So traded to other block, bullish other block, and price has taken it higher. Remember that there was an area of inefficiency that it left. So this movement up, I want to go feed it in and then resume lower. So this week, these are our targets. It won't be as animated as it was this last week. So this level is what I'm looking at. All right, so I want to trade to it again before it gives up the goals to go lower. So this is our target, bullish movement to this level for the week. That's our target for the week. This area right here, that's our target for the week. Equal highs, small inefficiency, and a trade to the bearish order block. That's what I'm looking for. What I'm looking for. So we have inefficiency here. Let me take out this. Have inefficiency here and here. All right. But this is like a breaker. Has gone low, high, lower, low break. So this is the level we're looking for. Monday, Tuesday should send price to this level before it goes higher to our objective right here. It has not taken out this high, so I want to drop a little to this level, and then before it sends price higher to that level. So this area, extend this candle, this bullish candle, just extend it out in time. That's what I want to see. Where I want to see price get to this area. Let me just extend it out so you can see. Good. All right, this level is what I'm looking at. So 4 hours. Yeah, equal lows, FBG. That's where I'm looking at. Trade to it. Stand it out here, this level. All right, that means touching the low end of this big inefficiencies here. This one from this high to this low right there. This low here. Straight back to it before it goes higher. All right, so that's what we're looking at. Okay, so that's trading to the opening price of that candle. This particular week, opening price of it. Then we want to see movements higher. All right, so this level, and then next week we want to see price going. If it gets to this objective this week, then we will not see movements high, lower, going down, because it's just a movement up and then to go down. Inefficiency, and then finally go down to sweep liquidity here, resting here, and ultimately challenge this. You have a volume imbalance here. Okay, so that's for SP 500 or US 500. Now, NASDAQ 100 or US 100, sale price went higher. I actually wanted this whole thing to be free. That was my anticipation going into last week, but it didn't. It retraced and went higher. So let's see how. So what are we looking at for? We have this high here. This high here will be our next line of action, right? That's what I'm looking at. To take this high, but it shouldn't close above it. Or the rejection block resting here. That could be on that draw. So low hanging fruits, it moves higher. Rejection block resting here to be, but shouldn't close above it. Can wick through it, but shouldn't close above it. On daily time frame, Monday, Tuesday. So this area acted as support and then started going higher. So the moment it broke and closed above it, see this level I marked, I wanted it to trade up to this level and then go lower. But the moment it closed above it, I knew that we're going to send price higher. So this is the level I'm targeting. We have equal highs resting here and volume imbalance, but that should be too animated to the upside. Maybe, just maybe, it might get to that level. But this is my low hanging fruit. This is my low hanging fruit. Okay, so we have breaker block resting here. These two up close candles, they are breaker block, bullish breaker block. So you might want to test, come back into this area of inefficiency, which is also balanced price range. So just a little into the consequent encroachment or the mean threshold of it, and same price higher, or the top of this level, this inefficiency. So it can act as support to go higher. So, but we want to see downward movement Monday, Tuesday to this level before we see related price action going higher. So I don't want to see it run on Monday to take out this high. If it does that, then we'll be bearish throughout. If it does that, but if it doesn't do that and moves to this level, then I want to see movement higher from Wednesday, Thursday to Friday, take out this high. So that's what I'm looking for. All right, so 4 hours time frame, this level here, that's what I'm looking for. So you should trade back to this level and then finally send price higher. Okay, that's my anticipation going into this week for NASDAQ. All right, so we are bullish on NASDAQ as well. We'll look at that level I just marked out. Okay, so this we now want to test this level of inefficiency, this area now. This low down to this high. Good. So that's our level. To fill it in, you shouldn't trade above here. You should just fill it in and then later send price. So our movement up should be into to fill in this inefficiency that it created some weeks ago, last month. So we want to see trading to fill in completely before. So we're bullish and our target is to fill in this inefficiency. That's this high end. That's our target. Let's take a all these salient anymore. Okay, so we want to see trading to it, filling. That's our target. Okay, that's our target. We have inefficiency right here. So that could act as support to send price higher to fill in. So wanted to say trade to this level, and then we'll see Tuesday, Wednesday into Friday, fill in completely before we start to trade down. So bearish and then bullish. That's our anticipation. It has not closed above this completely, so we might want to see permission trading lower to this level. Okay, to this level right here. So this will be our breakup here, this particular one. So if it had closed above here, then this would have acted as breakaway down. But because we didn't close above it, I want to see movement lower. Because what will be the framework? This will not be like a resistance zone now for traders thinking that here's resistance to same price. Here's resistance to same price lower. All right. So people will now want to start selling. Yes, if you give them some form of sell down to this level and then finally rally higher, sweep double tops, filling area of inefficiency perfectly well on weekly time frame. That's my framework. That's my anticipation. Okay. So we want to see movement down towards our breakup block. So if you mark this level out here, something like this, this is it. Straight to this inefficiency here inside breakup block, other block here as well. So you should trade as bullish order block, and then breakup block high. We have low, high, lower low, then the send price high. So we want to come back because it didn't take out this high. We want to see how it wants to come back, test this level again before it goes higher. So that's our support zone. This area now act as support to send price higher, which is a breaker block and also inside a bullish order block. All right, so that's our US 30 on 4 hours time frame. This area get back to this level before it finally goes higher. That's what I'm looking for. Get back to this level, then finally go higher. All right. So that's it. That's it for US 30. Then our gold. You see what is happening? The week that dollar went bearish, this also went bearish. So what is happening here? Remember I told us something that we have a so that's what do you call it? A CB. See how price is respecting that CB, even if it traded it above it a little, permissible because like that was like that sometimes. And it was because of that thing that I did that I actually felt that, okay, he might want to trade to clear the rejection blocks here because he traded above it. So I'm still having that in mind that it will now trade to the rejection block. That's the rejection block here. That's what I'm looking for. Okay. Since he didn't give me that, what do you call it, last week. So this week I want to see trade to the rejection block. That's what I'm looking for. That's what I'm looking for. Or it goes higher, um, then if you measure this, the 50% constant encroachment should have another drop on liquidity. The dollar is going to go down this week, then this will go higher. This area was like an area of resistance broken, now turn support. So once you go up, measure this area right here that's taking out this high somewhere here. Throw it out. That's the level I'm targeting. Takes out the rejection block, and that's the level. The next level we are targeting this area right here. So let me put my marker. But I'm not trading this pair. I'm not, because it's not getting sync with what dollar is doing. Because this week dollar went down. Sorry, last week dollar went down and this went bullish. This also went down the same way dollar did. So I'm not comfortable with that. I'm not comfortable with that. So we have Monday, Tuesday, Wednesday, Thursday, Friday started going up. I don't like that. I don't like that. So we might consolidate here a bit and then finally move up higher to this level I've outlined. Let's see what happens. Good. We have little, it has also filled that, so that's not a problem. Let me just hold on. Let me measure something. Good. Okay, filled it completely, and we're seeing the rejection. After filling it completely, here, right here, we're seeing the rejection, and then close above it. So if dollar goes down and this goes up, that means the symmetry is now in place. The symmetry is now in place. The symmetry is now in place. So this might now be our level, all right, which is inside the, what do you call it, the bullish, the bearish order block. So that can be another drop. I'm not trading this. I'm not trading this at all. I'm not trading this until there is a perfect symmetry between dollar and gold. I'm not doing anything as regards to gold. I'm not as regards to gold. If it goes higher, the only thing I'm seeing on daily time frame now is this rejection block on daily time frame. That's what I'll be seeing. I'm looking for. So if you pierces this constant encroachment on weekly time frame, then the next draw will be this area right here. So let me just mark them out. So those are the two levels I'm looking at. Like two levels are here and here. Good. That's 50% of this particular keeping this high. So that's what I'm looking at. All right, because this, the, what do you call it? The CB actually held price very, very well. And one will see the movement down. We have a little one right here. We mark it out as well. So Monday, Tuesday movement should go to this level. If at all it wants to go bullish again, so trade to this level, trade to this level, and then act as support to go higher. So these are targets before we finally start seeing movements lower on gold. Okay, that's about that. Then our what do you call it? Our Bitcoin, which is the last on our list. Bitcoin. I told us that what we are seeing here is a high, a low, a higher high, and it's broken down. This is our bearish breaker block. So you might gravitate higher to fill it in, or this particular one right here stay within the breaker block. See this little video right here. So let's see how it trades around these levels. Good. So it might fill it in completely and start going lower. All right. But the moment it closes above this breaker block, then want to trade to this level. But that's long-term perspective. For me, I feel that we're trading into this breaker block to send price lower, attacking these lows and ultimately all these lows here. That's my framework. This is monthly time frame things. Okay, so weekly time frame. If it fills in here completely, this is your bullish bearish order block. Okay, you might want to test it again and send price lower. So all within the monthly breaker block, all within the monthly breaker block, all within the monthly breaker block. So last week was all I can see how small it was. Bullish was very small, very small. There was no volatility at all. We had Monday, Tuesday, Wednesday, Thursday, Friday went lower. The same time, dollar was going lower. This also went lower, so there's no symmetry. This is today, Saturday. Sunday, we'll still trade on Sunday, and ultimately we'll start going higher from Monday, or go lower, attack these lows, and then we'll start going higher. But what I'm trying to say is that if you're using this inefficiency, you want to start seeing price going lower. The highest point of bullishness for what do you call it, for BTC is this level right here. That's the highest point. If you want to go, if you want to be admitted to the upside, that's the highest point. If our bearish stance still stands, then the highest point is this level. If it breaks above this level I've just highlighted, the next level will be this before it starts going low. Okay, so that's BTC for you. We've been consolidating throughout consolidation for 2 weeks now, also consolidating. So that'll be another movement up to fill in and then go low. Let's look at how it pans out this new week. So normally, if dollar is bearish, this should be bullish. So yeah, if we're using that narrative, then we're going to be bullish on weekly time frame. Bullish on weekly time frame. At least let's see if we can target the high end of this inefficiency, this monthly CP. Let's see if we can target the high end of this. Okay. All right. So that's about that. We're done. I've exhausted everything. I think there's nothing else to look at. So in conclusion, dollar is bearish this week, or dollar will be bearish this week. Foreign currencies will be bullish this week. So we have dollar bearish, USD CAD, USD JPY, USD CHF, all bearish. Then Euro USD, GBP USD, NZD USD, AUD USD, all bullish. Gold should be bullish as well, and then BTC should also be bullish this week. So that's our summary. That's my outlook for the new week. If you have any question, just type it. I'll answer your question briefly. Just type it. I want to stop the recording right now, and then I'll attend to your questions. Okay. So if you have questions, just type it. If you want me to give you permission to speak, you let me know. I'll allow you to speak, and then we'll continue from there. Okay. So if there's no question, I want to bring this class to a close and wish you a good trading week. Hope to see you next Saturday rather, same time. Bye for now.